Nonetheless, a lot of kind of negative data coming into today, which of course is the big day that the markets were really seeming to be kind of waiting on all week. Good afternoon. Hope you're staying dry here this week. We have quite a bit of economic data kind of suggesting some slowing. And then the big day today, the thing the markets have really been waiting on, the inflation data here coming out with some of the PCE inflation numbers. So I'll be sure to share about that as we get into the meat of our conversation here today. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday at 3 is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out a bit of the noise along the way. So before we get to the core of our conversation, which of course is inflation, it remains the thing to watch. I do want to talk a little bit about some economic data leading up to the inflation numbers we received this morning, and with a general theme that it certainly was kind of suggesting some slowing in the economy. Now, not significantly, but nonetheless, there was some cracks being shown in some of the economic data here over the last week or so. So we had new home sales come out. Home sales were lower than expected. Mortgage applications were down. We had consumer confidence numbers come out, and those came out much lower than expected. And then to kind of tie it all together, we had the first GDP revision for Q4. So again, think Q4 of 2023, which was still, a good number, but nonetheless, the first revision came out and was revised down slightly. So, this kind of all, kind of the theme, I guess, was certainly some slower economic data. Now, keep this in mind. This is 1 week of data, and we have seen a lot of positivity on the other side of the coin. But nonetheless, a lot of kind of negative data coming into today, which of course is the big day that the markets were really seeming to be kind of waiting on all week, which was around inflation data. So today we had both PCE and core PCE inflation numbers come out. PCE, so again, headline number, again, this does include energy and food, came out at up 0.3% for the month of January, which was in line with expectations. But to be very clear, this was another big jump, similar to the CPI data that we had received a little earlier in the month as well. So, in line with expectations. In fact, it actually does bring down the annual inflation story, but obviously a 0.3% in 1 month, if that were annualized, does not equal the Fed's 2% target. And on top of that, we had core PCE data. So again, take out now food and energy. And core PCE showed it was up 0.4% for the month of January. Now, again, this was in line with expectations, but nonetheless, it was a big jump from last month for sure. And what I think is important to highlight here is keep in mind, remember, core inflation takes out food and energy, right? So if core inflation is showing it's up more, 0.4% in the month of January, during a period where oil prices have come down quite a bit, as you might imagine, if we do see energy prices pick back up, it could create some much larger headline inflation numbers ahead of us. So this is a story that I feel like not a lot of people are talking about, but it is really important. In all of the inflation data that we've seen, it's the good numbers that we've been seeing as of late also factor in a much lower price of energy and oil more specifically. So that helps. But obviously, if that doesn't sustain, if we do see energy prices pick back up, something that I don't think a lot of folks are talking about is that we could see the headline inflation data numbers pick back up almost purely as a result of that too. Now, to be clear, the Fed continues to focus on the core inflation data. So that does take out this, volatile energy index or price index that I'm kind of referring to. But it is important, and although that is the main thing that they watch is core PCE or core CPI, the reality is we all feel the headline number too, right? I mean, we all need to fuel up, we all need to buy food, and so although the Fed may be more focused on the core, the reality is that that could impact us as consumers for sure if oil prices do pick back up too. So I guess, from the expectation perspective, it's not a whole lot to write home about here. However, it is a much larger print than we saw last month. And so this is an ongoing conversation, obviously, about what the Fed may do. And I think this is exactly, why the Fed is being cautious and suggesting that they're not in a place to start cutting rates anytime soon. This is a perfect example of why that should be the case as well, is that inflation, again, may be a little stickier than I think a lot of folks might think. And if it continues to come down and we can see that sustained path, then certainly rate cuts may make sense. But I think that that's the most important thing, is to make sure that this actually is the reality and inflation is actually coming down and sustainably coming down. But nonetheless, to maybe wrap up some of the data points here for this week, we also received personal income, and personal income was up 1%, a whole percent, not point anything, a whole percent here for the month of January, and spending up 0.2%. So again, a little bit slower number there. But coming up next week, be sure to tune in. We've got Jobs Week ahead, and then we also have Fed Chair Powell testifying in Congress. So we'll hear a little bit more about what he has to share about, some of the insights behind the Fed decision and thinking as well. But before we break here this week, I want to touch on a really broad but really strong question from Cindy, which is, what is something that I wish people knew when it comes to personal finance? And I had a hard time with this, to be honest with you, because it's such a broad question, but I think it's really important. And, I think there's certainly a lot we should be sharing here, but maybe the biggest thing, if I had to highlight one, is to understand the impact of tax planning and the importance of what that means in relation to everyone's personal savings, finance, retirement, you name it. And I know that, here we talk about tax planning quite a bit, but in general, I feel like it's something that isn't maybe highlighted as much as it should be. Returns and all that stuff are certainly important, don't get me wrong, but tax planning is really, really a critical piece of this. In fact, for most, when they get to retirement, it's probably one of the largest expenses that you'll experience over the course of your lifetime, or I should say, even outside of retirement, right? I mean, it really is a big factor in everything. And it's very timely that this comes up, because we've been talking a lot about the Tax Cuts and Jobs Act and the possible sunset on the horizon in 2026, and potentially higher taxes ahead. So this is a great time to kind of address this question too. Now, what I would share is I'm obviously talking really high level in terms of the importance of tax planning, but one of the things that maybe I'll leave you with is also to understand how tax planning may relate to the long term. So what I would suggest is that even the folks who do understand how important this is, a lot of times the focus is just on reducing taxes in the current year. And don't get me wrong, that is important, but a lot of times by doing so, you may create much larger tax burdens in the future. And so really from our perspective, tax planning is a lifelong journey. And so sometimes, believe it or not, it may mean paying more today in order to create much more tax freedom and opportunity down the road. So Cindy, I really appreciate you sending this in. And I think this is a really important topic to touch on. So hopefully this is helpful. Everybody I know knows how important taxes are, but I would say this is, if not one of the most important pieces of financial planning, and making sure that we have a really strong game plan for tax strategies and how we can kind of manage that over the lifetime. So hopefully that's helpful. Be sure to tune in next Thursday. Again, we got a lot to cover with Jobs Week kicking off, and then the Fed Chair Powell's testimony with Congress. Have a great upcoming weekend. Stay dry, and we'll see you next Thursday.